So what is the secret that everyone wants to know when it comes to how I personally trade, scalping, supply and demand zones pretty much, okay? It's pretty easy if you watch the video content, and what I would do is watch the most recent videos from now going backwards, okay? Not starting from the beginning, moving forward. So, because that's going to bring to light the most relevant trading information and video content that I've made surrounding the strategy and how I trade and the quote unquote secret that everyone wants to know about trading confluence, meaning the zone within the zone. All right. Now I'm using higher base charts, okay, primarily the 120 and my 24 range chart when I'm trading the NASDAQ futures, the ES, the 60, and the 12. Now today I want to share with you, for all those out there who may be looking for more confluence, okay? 1, 2 means of confluence, or maybe even a third means of confluence. And people always ask me and state, well, what if there's no setup, say for, in particular, on the higher base chart where we're marking our original or first zone out on the 120? Well, as on last Friday, March the 14th, we had a market where it was just kind of pushing to the upside. There wasn't a whole lot of price action activity if you specifically look at the 120. But again, there were two nice setups that I saw around about midday, okay? Now, what you can do is you can scale down to maybe even a slightly lower time frame chart. Or lower base chart. I wouldn't go too low. So for example, maybe you can use like the 60 and the 24, if you're interested in doing that. But what works beautiful is if you can identify a 120, a 60, and a 24 range, like either demand or supply zone, because then you're picking up another layer of confluence that will also provide you a better possibility and probability of the trade working out in your favor. I want to talk about that in today's video as well, and also show you that, I mention to people all the time and traders on this channel and videos about not counter trend trading. Now, if you know what you're doing, you can counter trend trade, but I don't recommend that unless you have the experience. The number one thing that you need to really understand is understanding the structure of the market and looking for the bigger breaks of structure. If you have a nice structural break, say for example, and we're in a bullish market and the market starts to make lower lows and lower highs coming to the downside, and we're breaking structure to the downside off of a nice, beautiful formation of structure. But the overall higher base chart is bullish, but you see with the market on your lower base chart is making lower lows and lower highs where we're breaking a nice area structure. You can look for a quick scalp going short against the grain of the higher base chart. But again, you must understand that that trade more so is going to be short-lived than anything, okay? Now, a trade that I took today and I posted it on the Discord community. If you're not a member of the Discord community and you want to join, the link is down in the description portion of the video for free, the first link, okay? Now, I'm going to be breaking this trade down. It was a long scalp opportunity that I've marked up off the 120. There was also confluence with the 60. There was also confluence with the 24. But primarily, I'm just trading, the 120 and the 24 when it comes to the NASDAQ. But there was also a confluence zone right here in the same area on the 60 range chart if you want more confluence. That's why I'm marking up where you see these multiple zones in the kind of the same geographical area, right? But anyways, I'm going to be posting that trade breakdown to all my elite channel supporters over in the private community. If you want access to the trade breakdowns, to the video playlist, to a great video that I cover surrounding market structure as well, it's only $6.99 a month. That's pennies on the dollar a day. Just break it down, okay? Over a 30-day period or 31-day period, that's only pennies on the dollar a day, $6.99. Again, lots of people spend more than that a day, and this could be something for basically $7 a month that could be game changing and change the way you trade and help you become a profitable trader as well. Can't make any guarantees because everyone sees things differently. Some people are so stuck into old ways of doing things, they try to merge things together even with something new, and then they start making bad mistakes, okay? For me, I had to draw a clean slate, start from a clean slate, and learn that way, all right? So if you're interested in becoming an elite channel supporter, the link is down in the description portion of the video, only $6.99 a month. All right. So I'll be breaking that trade today down. Now, all right. So what I want to show you, for example, and there were a couple opportunities today to actually look for some trades going along. There was one today when the market pulled back here around. This was right at the open in the market though. Beautiful trade set up, but I don't like the trade, the indices when the market first opens up. Had this been any other time, I would have taken this trade on this pullback to this key area of demand right here because we got a breaker structure above this high right here at 19,742. It broke higher. Beautiful demand zone, and we also had a 24 range demand zone as well resting on the inside. Guys, the strategy, all it is marking up. If you got a nice breaker structure, in this case here, because we're bullish, marking up your first zone off your higher base chart. For me, it's the 120 because I trade range charts right there. And then as the market is retracing back to the 120 range zone or whatever your higher base chart is, find a smaller demand zone resting on the inside with the market broke structure as well. That's all it is, okay? I talk about that many times within the channel here on video content, okay? Or within the videos, all right? Now, what I want to show you is this right here is where there were multiple opportunities today to take trades off of the NASDAQ, okay? In particular, you could use the 24 range as long as you're following in the direction, say for example. But I'm going to show you two things, trading with the higher base chart when it is bullish, okay, looking for a demand status. But you can also find opportunities counter trend trading if you know what you're doing on nice structural breaks when the market is moving lower in a bullish uptrend, okay? So for example here, this was, okay, for example, when the market broke structure above this high right here on the 24 range. But if you look at I think it was the 120 right here at 19,779. Yeah, okay. This was a structure break on the 24 range chart. Yeah, it did break some structure as it pushed higher here. But if you look at it on the 24 range, you can see where the market made, a lot of structural formation as it was coming to the downside, and then when it broke above this area here. So this is a nice structural area right here where it broke and took out a major area of structure on the 24 range, say for example. And then it pulls back, and I was waiting for it to come down to originally back down to I'm gonna go back to the 120, back down to this area right here. Okay, the reason why, because when the market broke here, if I look to the left hand side of the chart, it also took out this high right here when it pushed higher. It made this push here, pull back, and it broke above this high and this high right here, breaking above a major area structure on the 120. That's why I had this 120 range demand zone marked up right here, okay, originally, all right? So when I saw that and the market was coming down, it almost tapped the zone right here, but it didn't, okay? It didn't right there. So it made a lower high, and it broke some structure counter trend to the overall direction of the market coming to the downside. But if you pay attention when it did though, when it finally tapped the zone, again, there's no higher probability lower base zone until it gets down in this area here. It turned back around and it broke structure, breaking structure back to the upside right here, as you can see as it is moving back to the upside, okay? So we have a lower high coming down, breaking structure below this low right here. So when it did tap the 120 zone, I said, okay, well, it didn't come into the zone where there's a high probability lower base chart, a demand zone. So when things like this happen, just wait for the market to show you some bullish direction when the market is taking out decent areas of structure, like pushed up, pull back, okay? It broke higher, took out structure right here, pull back here, broke higher, took out structure right here. This is how you can find or identify some nice quality demand zones after the market, say, for example, taps a higher base zone again, but we can't find the confluence with a zone within the zone. Then just wait for it to show you some direction to where it is making, moving in the direction of the higher base chart and is breaking structure back higher. That's why I have this demand zone marked right here with this yellow box. That yellow box notates a 24 range demand zone directly that you can take an entry from, trading in the direction with the higher base charts. That is what makes sense, okay? So I'll wait for the pullback right here, look for an opportunity to go long. Yes, if you look at the lower base chart, it looks like we're starting to make lower lows and lower highs, but overall, we're still bullish at this point on the higher base chart, taking the trades in the direction of the higher base chart. That's what's key. And then you can see the market does react here, pushes up, but then it comes down and taps into a high probability lower base demand zone that I originally had marked up. I was waiting for it, and there was multiple confluence here off the 120, anyone that trades the 60 and the 24. Okay, there was 3 charts that show confluence in the same geographical area. I just have to wait for it to tap into those zones. But what it continued doing, or what it did after it reacted off that demand zone right there, off the 24, that's a bullish demand zone right there. It started coming to the downside. It broke below these lows right here. Okay, so it took out the lows. So now we got a nice structural break to the downside, where it's taking out a a decent area structure coming down to the downside now. And yes, it is breaking structure lower, as you can see here, only on the 24 range chart. We haven't taken out any major low where there's a nice structural break. This was a major low right here. If it comes down and takes that area out, it hadn't done that quite yet on the move here to the downside until it came down and broke right here. Then we took out this major low on the 24 range chart. All right, but still, overall on the higher base chart, we really haven't broke or taken out any major area structure coming to the as we come back down. All right, so I'm still looking at the market as being bullish, even though we got these lower lows and lower highs coming to the downside. We haven't taken out. This would be a major swing right here if it takes out coming to the downside. All right, so but look at strictly at the 24 range chart. If you're trying to scalp and take entries off of the price action activity in accordance to what's going on the lower base chart, low, lower high, breaking below this low, low, lower high, taking out more structure coming down as we come down, low, lower high, breaking more structure here and here. So this would be a nice pullback to a key area. It could have reacted, let's see, and possibly here, but you have a gap right here as well. If I blow this up a little bit so you can see it. When the market could tap into, and it started pushing back to the upside here. Now this is a counter trend setup right here at this area of supply right here. Okay, this is a very small imbalance or gap resting back at the zone. If you don't know what I'm talking about when I'm in referencing to imbalance or gaps back at zones, please watch some of the video content. Possibly even go to the homepage, type in gap or imbalance, and it'll bring up some video content for you to watch to explain what I'm talking about. But here we have. Even here, we have a higher base zone, okay? Not on the 120. For anyone that's trying to scale down and move down to maybe a lower base chart, maybe to 60, the pink box notates a 60 range supply zone resting right here. And the yellow one is the 24 range, okay? So if you look at the 60 range, yeah, we're breaking structure lower. So this would actually be a structure break below this low here and below this low here as we were coming to the downside. So yeah, this is a valid supply area where you have multiple chart confluence off the 60 and the 24 range. Okay, if you want, anyone that trades using those two charts, I'm just showing you some variations of some things that you can look at as well. So, but this is counter trend still to the overall direction of the higher base chart, the 120, okay, overall, because we still haven't taken out any significant area of structure or a major low coming back to the downside. If you look at the 60, yes, it looks like we have right here coming to the downside, broke. So it looks like we're bearish to the downside, but overall, still on the higher base chart, we are still bullish, okay? So yes, this is an opportunity for a counter trend setup that is going against the higher base chart, but still if you have multiple chart confluence, say for example, to where you can take a supply zone setup, where you have maybe like a lower base, like a 60 and a 24 range chart. Again, counter trend, it worked out. The market came to the downside. Then it comes down even lower. It sweeps liquidity right here, and then it pulls back. Now, here on the 24 range, let me look at the 60 right quick. I just want to take a look. Yeah, this is another structural break coming down right here. Low, lower, high, breaking an area structure right here, coming lower beneath this area here to the downside. Okay, so when it pulled back to this key area, let's see, 11 o'clock. Let me see here. That was not a high probability supply zone on the 60 range, but there was a high probability supply zone specifically only on the 24 range. So when you don't have a lot of confluence, multi-chart confluence, whatever the case is, the trades can be a little bit riskier if you're looking to take them strictly off of nice structure breaks where the market may have taken out, say for example, like a major low right here on the 24 range chart. Okay, it's not a major low on any higher base charts, but where it made a low, lower high, taking out a major low right here, coming back to a nice area supply where there's only basically one single means of confluence in a sense. In this zone right here, supply zone, there was aggressive selling. It took liquidity, it came back, tapped the zone, and went lower right there. There isn't any other like multiple chart confluence where you have maybe, you know, higher time frame or higher base chart confluence with the lower base chart, but you can still trade it, but just be looking for opportunities to scalp it. But wait for better trade setups or better, I should say, structural points. Okay, formations like right here. This is a nice swing right here. A lot of structure within this area. High, higher, low. Breaks higher, taking out even, you know, structure to the left-hand side, comes back, takes out more structure, going back higher before it starts to come back down and breaks below this low here, which is a nice structural low right there. So yeah, this is a supply area here. It could have came up and tested this one here, which it did. Eventually it came up, tested that zone right here, lower base, another area of supply off this structural break right here, okay, and it pushed lower. So again, you can trade off the 24 specifically, but just keep in mind it's going to be a little bit more risky, and if you do so, look for quality formations of structure to be broken if we're moving lower. Again, on the 24, it looks like we're bearish to the downside, but on the higher base charts, we are still bullish. Now, after that break right there, it came down, pushed back, broke below here. Okay, if you look to the left-hand side, we took out some more structure right here, broke below another area of structure coming down. So there's a nice pullback to a key area supply. Again, directly off of 24, where you're taking a trade from. Got a low here, formation of structure going back to the upside, higher highs and higher lows, taking structure out to the left, coming back down, nice swing with this formation of structure up, comes back down, takes out a major low right here, beautiful aggressive selling right here. Look for the pullback directly. The yellow boxes notate only, in this case here, supply zones directly off of 24 where you could have taken trades from. Right here, market reacts, rejects, take it short, okay? That's what I want to share with you guys today was that, yes, primarily we're looking at the 120 and the 24 when it comes to multi-chart confluence. People always ask me, are there opportunities to take or trades where the market may not be pulling back to, say, the 120? Can you look for trade setups where you're taking trades specifically on the say, the lower base only? I would recommend if you do that, trading it in the direction with the higher base. So if the higher base chart is bullish and you can't catch anything off the 120 where you're marking up a zone first, then look to see if you're getting nice structure breaks on the 24 where it's pushing up to the upside and look for a pullback to a key area of demand. If we start to move lower and we have nice structure breaks to the downside, like right here coming down, right here coming down, those were nice big moves coming to the downside, breaking below lows here, breaking below lows here. You can look for pullbacks to key area supply, but keep in mind you're counter trend trading against the higher base overall, larger base chart or lower or higher base zone. Higher base chart, the 120. All right. Again, I'm going to be breaking down the trade that I took today on that demand setup going long on the NASDAQ. Okay, earlier that I took and posted on the Discord. If you want to become an elite channel member again or supporter, please, the link is down in the description portion of the video. Click it. There'll be 2 tiers that will pop up. Make sure to choose the one for $6.99, and that's going to give you access to all the trade breakdown videos that I posted to that private community, as well as the video playlist and a great video that I covered on market structure. All right. If you aren't a subscriber, please take the time to go ahead and subscribe by clicking the sub button. Make sure to turn your post notifications on by clicking the bell as soon as you do that. And last but not least, if you found value in today's video content, please make sure to drop a like, clicking that thumbs up button for me before you jump off the video right now. Take care, and I'll see you in the next one.